Hari, it's great to have you with us today. Talk first about your picks in the chip space. A lot of these names we don't talk about too often. They're a bit of smaller players like Monolithic Power.
Yeah, hi, Deirdre. It's good to be here. So we see the opportunity for investors today is to take advantage of what we have seen as a general a healthy move in the tech space, where companies have been companies that were typically overvalued in the software as a service segment sort of come back to earth. In that regard, we think there's lots of companies in the semiconductor space that we think are quite interesting. These are battle tested back in 2018-19, having gone through a trade war. They've had to battle cyclicality. They've had to battle shutdowns, shortages. And so we think this is a very interesting area for us to be looking at sort of semiconductors. In fact, we believe that semiconductors will be the staples of the next decade. In that regard, we like companies like Analog Devices, Monolithic Power, and companies that feed into the semiconductor ecosystem like Cadence and Keysight.
And Hari, just speaking more broadly as well, we've talked to a lot of guests recently amid the market turbulence who say that, maybe you want to hold a little bit more cash on hand, especially if the economy slows down further. You're kind of taking a different tact, though. You say that cash today can seem more urgent, but you could miss out on some thematic investment opportunities.
That's right. I think our general sort of idea here is if you wait for the robins, spring will be over. And I think there's a generally good case to be deploying capital in an environment like we are in today. Now, they may not be in the obvious spaces. We are, in addition to sort of semiconductors and the view that semiconductors are becoming the staples of the next decade, meaning they're going to be more resilient than they've been in the past. We also like this theme that old is gold. We look at companies like John Deere. We look at companies like Disney that I think are quite differently positioned than they were in the last 10 years. So we think that's an area for us to be interested in deploying capital, as well as this cheeky idea that let's not get too sassy about SaaS now. So there's opportunities even in SaaS, but one needs to be more discerning, and we need to be able to separate out companies that have the ability to demonstrate good quality growth in addition to just growth itself.
What exactly do you mean about Deere and Disney related to gold? Is this a function of lessening energy intensity overall in the economy over the course of the last few decades?
Yeah, good question, Carl. So the idea is old is gold. So in other words, it's hearkening back to companies like John Deere, as well as companies like Disney that have used the last handful of years to fast forward and make themselves sort of more future-proofed. So when you look at a company like John Deere, it gets valued like a cyclical company today. But the proof of John Deere's execution in market was really not now when corn is at $8, but really at $3 a bushel. This is a company that generated in Q3 of 2020, approximately 500 basis points of operating margin improvement during a time when the world shut down. That, we believe, is a function of the investments they've made in precision ag, in helping farmers drive more productivity in an environment where the ag environment was not so strong. So I think going forward in an environment that is actually quite reasonable today, where the industrial economy is doing quite well, John Deere will take a lot more share, and they will also be able to monetize their investments to a greater degree than they've done in the past. And so we believe that at 11 times earnings, this company is priced for more cyclicality than it's going to really have.